What we're seeing right now is Bitcoin trying to establish its local low before a more significant relief rally. In today's video, I'll be discussing exactly this, going over the recent Bitcoin price action as we did get rejected at the yearly open and we tried to form a base around this level. If you enjoy the content, make sure to smash that like button and subscribe. Without further ado, let's jump right into the video. First and foremost, an update on my most recent knife catching trade. We entered sub 90K as I shared in yesterday's video, and today Bitcoin essentially dumped all the way down to just below $90,000. However, with my stop loss at break even, I still did not get stopped out. You can see that I secured a little bit of profit here as shared in my premium group. Everything that I do in terms of trading in this market is shared in that group, which is the first link in my description down below. If that interests you, you DM me the word premium on Telegram and I'd be happy to onboard you into that group. But the point is, I am still looking at this potentially forming a local low. The thing that we need to consider here though is we did make it above the yearly open yesterday after Bitcoin wicked to sub $90,000. However, we did get rejected. And at this point in time, we're trying to go ahead and form a little bit of a higher low here. Now, the thing that we need to consider is that there's no guarantee that we can't just come right back down, tagging that weekly low once more. However, if we were to do this, I would be seeing this as a max bidding opportunity. And in today's video, I'll be telling you exactly why that is. So to be perfectly clear, if we want to see more bullish momentum here, especially in terms of that trade setup that I just shared, I want to see us go ahead and reclaim the yearly open, and then we would likely start targeting Monday's high. However, if we continue to get rejected and get pushed down below the yearly low once more, it's highly likely that we go ahead and tag this weekly low. Now, what is this weekly low that I'm talking about? You can see it on this chart. We tapped into a very significant level for Bitcoin, which is why I went ahead and entered that trade in the first place. You can see that we held on to this 90K support level for quite some time before we of course had that tariff capitulation event. So this was always going to be a very strong support level, and I just so happened to be up when the price nuked below that level, and then upon a little bit of a reclaim on the lower time frames, that's when I went ahead and entered that trade and shared it in my group. But the point is, if we are to bottom, it would be from around these regions. Now, I'm strictly talking from a trading perspective. We'll get into the spot side of things shortly, but the point is, I am expecting us to form a low around these regions. This is the thing we need to consider. On the liquidation heat map, you can see that today we came back down and liquidated a lot of those late longers. Now, we still have some liquidity to the downside, but it is far less significant than before. On the 30-day time frame, you can see that yes, of course, there are some longs that are trying to catch this bottom, namely myself, but there is still tons of upside liquidity. At some point here, I do think that we will confirm the bottom and Bitcoin will likely get a larger relief rally. Now that brings me to the whole spot analysis. I discussed how I don't want to see us get this second weekly close below $98,000. If that's the case, to me, that likely confirms that the bear market has commenced. However, just because we close below $98,000, it does not mean that I will immediately sell all of my spot Bitcoin and Ethereum. Quite the contrary. We always get relief rallies in this market. Nothing goes up in a straight line and nothing goes down in a straight line. And so even if we are to get a second weekly close below $98,000, I would simply be waiting for a relief rally to offload some of my crypto. We hardly ever go down in a straight line. You have to consider that. We always get some kind of relief rally. Now, from a trading perspective, something else I wanted to bring to your attention, which I shared in my premium group this morning, is the fact that Bitcoin was hovering around $91,000. We ended up dropping lower after getting rejected from that yearly open, which we discussed. However, something that we do need to talk about is I'm getting a little bit more confident here that the bottom is forming. Now, that doesn't mean that we can't go ahead and even wick to, say, for example, $88,000. However, right around this zone is where I do think that the reversal will stem from. The reason I say this outside of the regular liquidity maps and how I typically trade the market is because, number one, we're seeing that the Binance spot order book depth delta is more positive and looks better on the higher time frames, as you can see over here. And then we also have the fact that the Coinbase premium is finally starting to slowly return. Now, it's not quite positive yet. However, we can see some early signs here. And typically, when the Coinbase premium flips positive, we do tend to get a little bit more of a rally. So that's currently what I'm looking at. Now, these aren't guarantees, of course, but these are just some of the tools in my arsenal that I use to determine whether or not the bottom could be forming. And something else that we want to consider that we discussed in yesterday's video, of course, the Bitfinex whales. These guys tend to start accumulating longs when the bottoms are being formed. And at this current rate, you can see that this is set to peak around the 4th of December. Now, does this mean that the price is simply just going to go lower and they're going to keep accumulating their longs? Perhaps. But I wouldn't rule out the fact that the bottom is potentially forming here, and these guys will likely offload some of their positions as we start to see a more significant reversal in the market. So here's the thing. My base case is that we will likely get some kind of relief rally, and it will stem from around these zones. Did I catch the perfect bottom? Perhaps that won't be the case. Maybe we come back down and revisit this level. You can see how close I got. I literally entered this close to the Pico bottom. Then on the lower time frames, we came right back down, almost touched my stop loss at break even, and now it looks like we're trying to trickle our way up. Now, if we start to reclaim these levels right around $94,000, that would be a very, very bullish sign in my opinion, and that would further my confidence in saying that the low could be in. We need to reclaim this yearly open level. Remember what I discussed in my previous videos. If you were looking for a potential long setup, it would be if we managed to hold support at the yearly open. We did not hold support at the yearly open, and therefore I still think it's okay to be a little bit more cautious in this market, especially if you're looking to go long. Now, this ultimate zone here is not where you want to go max short. In fact, we are seeing that some shorts are starting to offload their positions in this market. Ultimately, something positive to look out for. And before we go over the big events this week, just remember, if you want to know how I am currently trading this market, you do have that first link in the description down below, bringing you to my free premium group. I share my own insights in terms of spot buying as well, but I also share quite a lot of leverage trading. So if that interests you, you do have that first link in the description down below. The only requirement is that you sign up with one of my affiliate exchange links and you start trading on there as you normally would. If you're already trading on one of these platforms, I can get you in simply by transferring you under my referral. It is quite easy. DM my Telegram and I'd be happy to onboard you. Now, the news of this week. Well, first and foremost, we have to talk about Jim Cramer. He said it almost feels like a cabal is trying to keep Bitcoin above $90,000. I like Bitcoin, but I do not like any of the derivatives created to play it or game it or mine it. Very interesting to hear this from him. Something else I want to show you is that for the first time in 6 weeks, we had a green Tuesday for crypto. Finally, a green daily candle. It feels like it's been forever. Now, news. President Trump says he thinks he already knows who will be the next Fed chair, and interviews are already underway. Trump also said he would love to get Fed Chair Powell out right now, but people are holding him back from firing him. And we do have massive partnerships in terms of AI. Partnership details include Anthropic to buy 30 billion of Azure compute capacity, NVIDIA to invest 10 billion in Anthropic, Microsoft to invest 5 billion in Anthropic, NVIDIA and Anthropic to collaborate on design and engineering, and then we also have NVIDIA and Anthropic establish deep technology partnership. Ultimately, another multi-billion-dollar AI deal has arrived. Now, we've been seeing this time and time again, these massive deals. At some point, the bubble will burst. The question is, how soon will this bubble burst? Now, I also wanted to talk about this because there's a lot of chatter around the NVIDIA earnings. Polymarket has a 92% probability that NVIDIA actually beats its earnings, up 42% in a single day. The market isn't just confident, it's basically calling the quarter already. AI demand is rewriting every expectation. If NVIDIA beats their earnings and we get some reasonable economic data here, I would be expecting the bottom to be in. Now, we need to see if we can get out of this zone, get above the yearly open, and ultimately, if we do make our way back below $90,000, as I shared with you, from a trading perspective, that would be a max bid scenario in my opinion. At least that's how I will be playing it. And in terms of some more key events this week, today we have the FOMC minutes in about 6 hours from now. Then tomorrow we have non-farm payrolls, the unemployment rate, existing home sales. Then next week, we're talking about PPI month over month. This is going to be a very, very interesting period in the market. And if we do get positive data here, I would be expecting this bottom to continue to be formed as we go ahead and move higher for that relief rally that we've been discussing. Look, No one can predict the market with 100% accuracy, but my higher time frame analysis remains the same. I do not want to see us close the week below $98,000. Right now we are Wednesday and Bitcoin is sitting just above $91,000. That's a pretty big move if we are to confirm bullish momentum to the upside. However, despite requiring a pretty big move on the weekly time frame, I am expecting this local low to be formed from around this zone, which we held as support time and time again late last year into early this year. And so from a risk to reward perspective, it makes sense to bid around these zones. I firmly believe that the local low will be from around here. And that sums up today's quick video. There's a lot of work to be done if Bitcoin is to close that weekly candle above $98,000. But even if we don't, I would be shocked if we don't get at least some kind of relief rally in the market, which is where I would be offloading some of my spot Bitcoin and Ethereum. Now, from a trading perspective, this is the perfect zone to form a bottom because we've held on to it time and time again on a weekly time frame from back at the end of 2024 into early 2025. Multiple weekly closes above that level, that is. So if we start to get some wicks below, I will likely be heavily bidding, and of course I will be sharing this in my group. If you enjoyed the content, make sure to smash that like button and subscribe. If you want to know how I leverage trade the market, you have a simple tutorial right here, and I'll see you in tomorrow's video.